In this video, we're going to discuss the concept of property tax. So in order to understand property tax, we first need to know the relationship between how much a property is worth in the marketplace and ultimately how it's taxed. So if we take a look at this example, let's just say that this house is worth $100,000 on the marketplace. If it's worth $100,000, what we would call that is its market value. In other words, reasonably, if I were to sell this property on the marketplace, it's most likely worth about $100,000. So remember, whenever we're discussing value, it's ultimately an estimate, but it's going to be very close to what the property would likely take in an open marketplace. So remember, property taxes are a part of a municipal budget which pays for a lot of local services, whether it's the fire department, police department, streets, the cost of doing government. So if you own property, it's likely that you're going to have property taxes due every year, and the reason for that is to fund the government. So if my property is worth $100,000, the first thing I want to understand is that I'm going to be taxed at some percentage of the market value. And so let's say that that percentage is going to be 10%, which is fairly standard in a lot of areas for residential property, which we would call the assessment rate. Whenever you see the term assessment or assessed, we're usually talking about taxes. So the assessment rate, 10%, means that the government is going to tax me at 10% of its fair market value. So the first step to any property tax problem is to find the assessed value. So the assessed value is simply going to be by applying the assessment rate of 10% to the market value. So $100,000 times 10%, and we get $10,000, which means that is my assessed value. That is the cost, or how much my property is worth for property taxation purposes. So then the next step is how the tax rate is figured. And typically, how this works is what's going to be known as mills. So for instance, if our tax rate in my local area is 50 mills, so typically what you'll see is in your area, everybody has the same taxation rate. It's just a matter of the more your property is worth, the more your taxes are ultimately going to be. So property taxes are figured in what are known as mills. And so 50 mills, what that really means is that your tax rate is $50 per 1,000 in value. So in other words, 50 mills is per 1,000. So however many thousands your assessed value is, that's what your ultimate tax bill is going to be. So step 2 of property tax, quite simply, is to take your assessed value, which here is $10,000, and multiply it by your tax rate, which is 50 mills. The easiest way to do this is to turn mills, or the mill rate, the tax rate, into a decimal, so you can simply punch it into your calculator. So in order to do that, 50 mills, we've got to go 3 decimal places to turn it into a decimal. 1 place is tens, 2 places is hundreds, 3 places is thousands. And whenever there's a gap, you put a 0. So quite simply, 50 mills as a decimal is 0.050, which then gives us a tax bill of $500 a year. So what you want to understand about property taxes is that they're an ad valorem tax, or according to the value. Since everybody in an area will generally have the same tax rate, the more your property is worth, the higher your taxes are going to be. So property taxes and computing them is really an easy 2-step process. First, you need the assessed value. Second, you simply need to multiply the assessed value by the property tax rate, and you'll get your property tax bill for the year. So property taxes really aren't a complicated concept to understand, because generally they're fairly straightforward. So if you understand the difference between market value and assessed value, and you're able to compute your assessment rate and ultimately your tax rate as a decimal, property tax should be a cinch. Hopefully this will help you prepare for your license exam and understand property taxes in 5 minutes or less.